Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the UK general election and the pound, what's happening as the general election approaches, which has affected the pound, and the potential trading opportunities that will continue to appear as a result of the Brexit issue. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. First off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. So here's an example of a market opportunity. You can see some fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen here, 1.2840, this shows the right moment in our estimation to come in and open a trading position. That's had you decided to trade on this market opportunity when it was active. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. If the price is going against you, you can have a loss of the amount shown at resistance 1, 2 and 3, and they're in red. The pivot point is the starting price based on which resistance and support levels are calculated. These support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So, a brief history of Brexit-related developments. In 2016, on June 23rd, the UK held a referendum which was expected to produce a narrow majority in favour of remaining in the European Union. The leaderships of all the three main political parties supported European Union membership. However, almost 52% of the country voted to leave the EU, while just over 48% voted to remain. Theresa May's ruling Conservative government was split on the issue but negotiated with the EU and clinched a deal, but the UK's Parliament rejected her deal. After Prime Minister Boris Johnson replaced Theresa May in June 2019 and managed to clear a key hurdle in passing legislation to implement the deal in October, his Conservative government realised that the legislation for his Brexit deal would actually become a Brexit deal decided by Parliament. A vote was held, and he and the opposition Labour Party agreed to hold a general election. Let's take a quick recap of recent history and how developments in the UK affected the British pound. The new Prime Minister Johnson initially took a hard stance on Brexit, insisting that he was ready to leave the EU on the then deadline of October the 31st. But just as time ran out, Johnson left for Ireland and on 10th of October agreed a deal on the crucial backstop issue. As tension grew, noises came out of Brussels that the UK and EU were now very close to a deal, and on October the 17th, EU leaders endorsed Johnson's plan. The plan itself was very similar to Theresa May's. As you can see, the pound climbed sharply when it was announced that Johnson would rush off to Ireland for a last-ditch attempt in gaining a deal with the EU. Positive noises coming out of Ireland and then from EU officials over the following days spoke of how the two sides had agreed an alternative to the backstop, which was at the time the main stumbling block. The EU finally declared a deal on October the 17th, which saw the pound rise by an astonishing 6.37% in that weekly period. Major currencies tend not to move so sharply within a short time frame. So let's jump ahead, and in a moment we will see how the GBPUSD has reacted in recent weeks. Only days remain until the UK general election, and the main price driver for the pound at the moment are opinion polls held in the UK. So you can see the opinion polls here. The Conservatives are basically leading by 9 to 10%, with the Liberal Democrats, Greens and the Brexit Party bringing up the rear. So in this scenario, it's unlikely that Labour can win. The Brexit Party's numbers have collapsed, with many people now going over to the Conservatives, making their victory almost assured. The Conservatives promised to get Brexit done, and Brexit supporters appear to agree. It's important to understand what the markets want in this situation. Investors would prefer that the Conservative Party win the election with a working majority. This would enable the party and country to pass a Brexit deal agreed with the EU, leaving the instability of Brexit behind, to some degree at least. This means that Boris Johnson's Conservatives leading the polls or winning the election will support the pound, while a Labour lead or a hung parliament, that's a parliament in which a party doesn't have a majority, would push the pound downwards. The consensus view among analysts, though, is that it isn't enough for the Conservatives to win by 5 or 6%, for example, because this could still lead to a hung parliament. So, polls that suggest that a Conservative lead is approaching this figure would also put a lot of pressure on the pound. So if opinion polls, or the general election result for that matter, shows a Conservative lead of only 5 or 6%, this would send the pound spiralling downwards. With this in mind, let's take a look at the GBPUSD since the election campaign started. Early opinion polls showed that the Conservatives held a comfortable 12% lead or more over Labour as the campaign began. The pound moves higher against the dollar, as you can see. On November the 21st, Labour revealed its manifesto. Some polls suggested Labour was closing the gap on the Conservatives. Markets were nervous, as during the last general election campaign when Labour revealed its manifesto, this marked a Labour electoral comeback that cut the Tory majority in Parliament, which led to so many difficulties in getting Brexit passed by lawmakers. As a result, the GBPUSD dropped by 0.62%. Even though the Labour Party appears to be slowly catching the Conservatives, they still hold a 9% lead, enough for a relatively comfortable win. Since then, the markets have already begun to price in a Conservative victory, and we can see this as the GBPUSD jumped above 1.31 to hit a 6-month high. From an investment perspective, trading the pound has been easier since the Brexit vote. It is arguably the easiest currency to trade, since other factors such as economic data or interest rates have only a minor impact on the pound, while the Brexit issue, or opinion polls in this case, drives the currency up or down. Since the election date was announced, the main price driver of the pound has been opinion polls and the election result. You should note that Goldman Sachs recently predicted that if the Conservatives get a good majority, they believe the GBPUSD will go up towards 140. So the pound right now is a simple trade on who wins the election and by how much. But even if the Conservatives get a comfortable majority, the Brexit issue is by no means over. The UK will have to negotiate another Brexit deal with the EU, which must be passed by Parliament. This is the deal to exit the European Union, and it doesn't create or talk about the details of the trading relationship with the UK or EU. The UK will have to work towards a trade deal with the EU. There will be plenty of trading opportunities yet. I hope you found this webinar useful. Of course, at Fortrade we'll be following ongoing GBP developments ahead of the general election, which will be held on Thursday. Please get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at Fortrade again soon.